It's a very interesting market. On the one hand, you've obviously seen an increase in multiples. On the other hand, when you compare the price that businesses are trading at today with where they were trading at, say, back in 2006, they're actually quite reasonably valued. So the question for every buyer is, what can they do with the business when they've purchased it? You know, they've tended to buy it on a reasonably high multiple due to the fact that finance has come back. But at the same time, they haven't necessarily paid a lot more for it. And in fact, in most cases, less than they would have back in 2006. For firms like ourselves, which focus very much on transforming businesses, it's a good time. For firms which are really focused very much on financial leverage, it's a very risky time, because the risk they have is that interest rates go up at some time in the future, and at the sort of multiples they're playing to buy, they could be in serious trouble. The big difference was when we first started back in 1994, really it's 20 years ago, very few other firms were willing to buy businesses, change management, put people in. You know, the first few businesses we bought, we changed the management in every single one. One of them we changed it 4 times in the first 2 years. It's actually the management we ended up with, the team we ended up with, were there for over 15 years, and it's one of our most successful investments. But other people weren't doing that. What we now see is that most private equity firms claim to have some version of operational excellence, and they claim to focus on it. In our case, we've had to move on from that. And one of the areas we concentrate on a lot now is understanding how you can get the culture to go right down through the entire organization. And what we find is that you sometimes get very, very good management teams, but they're not necessarily good at ingraining culture within the organization. So they're very, very centrally led. And while that can be very effective for a short period of time, over the long term, it's less sustainable. I see Asia very much as a market for us. The culture is incredibly important in everything one does. And you know, we would be very, very vain and conceited to say that we have an understanding of the culture across Asia. On the other hand, we would be insane not to focus on the fact that the Asian market is going to be the biggest market in the world, and it's producing all the growth in the world. And therefore we see Asia as absolutely core to what we do, but not necessarily as somewhere we see ourselves as having a particular strength in investing in. The main function of that office is to meet with possible business partners. Business partners both on the investing side with regard to Europe, and on the partnering side with regard to distribution in Asia. Substantially. The big problem for Asian buyers is exactly the same big problem that we have. And when you look at the investments that Asian buyers are making in Europe, they're making very much the same mistakes that Western buyers made when they started investing in Asia, in that they're focusing very much on being able to buy something at what they see as a good valuation, rather than focusing on the quality of the business they're buying. So what we're finding is that by working with Asian buyers in advance, we can get them up to speed on what the quality is of what we're selling, rather than them just focusing on price. If they just focus on price, they tend to find that they're outbid by Western buyers.